What's up, everybody? It's the Digital World Podcast, and a shout out to Economic Ninja for putting this out. And this is something that you need to know about. Remember when I was talking about the IRS and them being able to track any bank account with $600 or more? So if you made a transaction of 600 or more, or had money in your account that's $600 or more, they'd be able to see every one of your transactions. Now, that was disregarded or scrapped. But now, there's another thing that is coming out. It's the 1099K. It's the payment card and third-party network transactions. And essentially, the whole premise behind this is if you, for example, have a garage sale, right? You have it once in a while just to kind of get rid of old things you bought, and you happen to exceed $600. You are now going to be required or might get hit with a 1099K from the IRS saying, hey, I saw that you made $600 or more. You're going to have to pay taxes on that. And that's after the fact you already bought the things and paid tax for it. And now you're trying to just sell it because you don't use it or you don't, need it, or it wasn't what you wanted, whatever, for whatever reason. So on top of already paying taxes when you initially bought the item, you're going to have to pay taxes again once you resell it, because they might be like, oh, is this a side hustle that you have going on that we didn't know about? Oh, you're going to have to pay taxes for that. Here's the article. It says, January 1st typically brings two things, yada, yada. She says, in particular, I've been contemplating on the change in 1099K reporting requirements for electronic payment platforms, such as, but not limited to, PayPal, Venmo, Cash App, and Zelle. Beginning January 1st, 2022, these platforms will be required to issue 1099Ks to any taxpayer who receives $600 or more for transactions tagged as goods and services. This is a change from our current state of affairs, which requires 1099Ks to be generated only for $20,000 of gross revenue and 200 individual transactions of this type. Each platform will generate their own 1099K based on this requirement, and it's my understanding that any aggregation of these amounts would need to be done by the tax authorities themselves upon receipt in order to get the full 360-degree view of the person's e-payment activities across all platforms. These transactions could theoretically be the basis for an audit on any relevant taxes, namely sales and personal/corporate income. If there was a significant discrepancy between the tax filings and the aggregated summed 1099Ks across all platforms for a single taxpayer. Now, this is, if the other way didn't work, now they're going to try to do it another way, because they know people use PayPal, Venmo, Cash App, and Zelle because it's more convenient instead of having to carry change or, or just carry money around cash. And because of the convenience, people are going to be like, you know what, screw it, I'll do it, I don't care. But no, folks, it's a slippery slope. The more you start complying in the beginning, the more they're going to intrude into your transactions, your private transactions. And that's the whole premise of the CBDCs, is to see all transactions real time. And they see how much you spend on food, what kind of food you buy, how much, how frequently you buy that food. Or, and it's not like you're having nefarious transactions that you don't want anyone to see. It's just there's certain things that you probably don't want other people to be aware about, like what kind of medications you have, what kind of intimate things of yours that you just don't want the powers that be to see, because that's your personal stuff. And with CBDCs, that privacy layer would be gone. And you see the issue with this, because now that's a step forward towards a tyrannical control of money. She says, as I've been pondering how this would all play out in real life, several thoughts and questions have arisen for me. She says her and her colleagues have discussed it, etc., etc. She says friends and family versus goods and services. There is some limitation inherent in these platforms that prevent people from using the friends and family option for large volumes or dollar amounts to avoid both the transaction fees and the 1099K reporting to the IRS or the states. Essentially, what is going to stop people from gaming the system in this manner? There is no way to know if they are reporting taxes on this activity properly, but if they're using friends and family to skirt platform transaction fees, it only stands to reason they view this business activity as off the radar and likely fodder for tax underreporting. I've seen this done by hair and nail salons and boat repair shops in my personal life, just to name a few. If you've ever taken the time to sift through Venmo transaction feeds where people have not chosen to make their feed private, it is very clear people are using the personal accounts for business activity, particularly with things like tips, gratuities, and services. These are essentially under the table cash transactions, just in digital form. Okay? And so she goes into other things, and I think I'm going to go and skip to this. Who is the taxpayer? She says, when I bought a dog recently, the Zelle account the breeder used to collect my money seemed to have a different first name from the name she used in daily life. When we get our boat repaired, the Venmo account our repairman uses belongs to his wife. This will impact the tax agency's ability to create a true aggregated view of an individual or business's activities. It is tempting for the sake of simplicity to treat each recipient yada yada. Okay, so the point of this being is that it doesn't stop here. Okay? Once this continues in snowball effects, you're gonna look back and ask yourself the question, how did we get here? And it's important to bring this to light and make people aware. And I'm totally for these channels like Economic Ninja putting this out in the spotlight and letting people become aware of that. And just like many of the YouTubers did in shedding the spotlight on the IRS trying to track all transactions with or all accounts with $600 or more, we're all doing the same for this exact same thing, because this has got to stop. It's got to end. And we do not advocate for a system like this, right? So without further ado, shout out to all those who are talking about this. And hey, it's time to spread this around, because this is serious. This is serious, and people need to become aware of this. And we're all here to help each other out. All these channels that are showing that, just like Economic Ninjas, we have to share this information and let people know, because we're here to help each other. And times like these are tough, but tough people stick together and fight for what they believe is freedom. This is the Digital World Podcast, and I'll see you in the next episode.